Booyah! Welcome back! Today we're diving into a battle of energy giants. We're talking utilities, those steady eddies that keep the lights on. Big money is at stake. American Electric Power versus Alliant Energy. Who wins? This is a cage match for your cash. Buckle up for a wild ride. You don't want to miss this. First up, let's talk about American Electric Power. Ticker symbol AEP, a company that's been around the block a few times. Founded way back in 1906, this powerhouse has weathered storms, recessions, and everything in between. They've got a century of experience under their belt, and that's something you can't just teach. We're talking about a company that's seen it all, from the roaring 20s to the dot-com bubble, and they're still standing strong. They've got a track record of delivering for investors, and that's what we like to see. AEP is a utility giant, supplying electricity to millions of customers across 11 states. That's right, 11 states. We're talking about a massive customer base, a recipe for steady cash flow, and a whole lot of potential. So what's the bottom line on AEP? This is a company with a rich history, a strong market position, and a commitment to delivering value to shareholders. Now let's talk about AEP's journey to the top. Over the years, they've made some savvy acquisitions and strategic investments that have propelled them to the forefront of the industry. We're talking about smart growth, not just growth for the sake of growth. One of their biggest moves was the acquisition of Central and Southwest Corporation back in 2000. This mega deal expanded their reach and solidified their position as a true industry leader. This wasn't some small-time deal, folks. This was a game changer, and they didn't stop there. AEP has consistently invested in new technologies and infrastructure upgrades, ensuring they stay ahead of the curve. They're not afraid to embrace innovation, and that's what sets them apart from the pack. From embracing renewable energy sources to implementing smart grid technologies, AEP is constantly evolving to meet the changing demands of the market. That's what we call forward-thinking management, folks. All right, let's talk numbers. How has AEP been performing lately? In a word, solid. Their recent earnings reports have been positive, beating analyst expectations and demonstrating their ability to navigate the ever-changing energy landscape. Despite the challenges facing the industry, AEP has managed to maintain steady growth and profitability. They're not just surviving, they're thriving. And that's what we want to see in a long-term investment. Their focus on cost management and operational efficiency has been key to their success. They're running a tight ship over there, folks, and it shows in their bottom line. Remember, we're looking for companies that can deliver consistent results, and AEP is checking all the right boxes. Now let's talk about everyone's favorite four-letter word, dividends. AEP has a long history of rewarding shareholders with a steady stream of income, and they've consistently increased their dividend payout over the years. That's right, folks. AEP is a dividend aristocrat, a rare breed in the stock market. They've increased their dividend for over 25 consecutive years. That's the kind of consistency that income investors dream of. Their current annual dividend yield is a respectable 3.2%, providing investors with a steady stream of passive income. That's money in your pocket, folks, just for holding the stock. So, if you're looking for a company that pays you to own it, look no further than AEP. Alright, let's talk about the stock price. As of today, AEP is trading at around $90 per share. Now, I know what you're thinking, that's not exactly a bargain basement price. But remember, folks, we're not looking for penny stocks here. We're looking for quality companies with strong fundamentals and a history of delivering value. And that's exactly what AEP offers. Is there potential for growth? Absolutely. AEP is well positioned to benefit from the growing demand for electricity and the transition to renewable energy sources. Remember, this is a long-term play, folks. We're not looking for a quick buck, we're looking for sustainable growth and steady income. So, what's the bull case for AEP? Why should you consider adding this stock to your portfolio? Well, let me break it down for you. First and foremost, AEP is a leader in a stable and essential industry. People need electricity, and that's not going to change anytime soon. That gives AEP a level of predictability and resilience that's hard to find in other sectors. Second, they have a proven track record of profitability and dividend growth. They've been delivering for shareholders for decades, and there's no reason to believe they won't continue to do so in the future. And finally, AEP is well positioned for the future of the energy industry. They're investing in renewable energy sources, smart grid technologies, and other innovations that will keep them ahead of the curve. Now let's turn our attention to the contender from the Heartland, Alliant Energy, ticker symbol LNT. This Midwestern powerhouse has been quietly building a solid reputation for itself in the utility sector, and it's time we give them their due. Founded in 1917, Alliant Energy might not be as old as AEP, but don't let that fool you. They've got over a century of experience under their belt, and they've been quietly delivering value to shareholders for decades. Alliant Energy provides electricity and natural gas to over 1.6 million customers across 6 states, primarily in the Midwest. They're a major player in their region, and they've got a loyal customer base that relies on their services. So, what's the bottom line on Alliant Energy? This is a company with a strong regional presence, a history of steady growth, and a commitment to providing reliable energy solutions. Now, let's talk about Alliant Energy's commitment to building a brighter future, both for its customers and its shareholders. They're not just sitting back and collecting checks, folks. They're actively investing in renewable energy sources and grid modernization. Alliant Energy has set ambitious goals for reducing their carbon footprint and transitioning to a cleaner energy future. They're investing heavily in wind and solar power, and they're committed to reducing their reliance on fossil fuels. This forward-thinking approach is not just good for the environment, it's good for business. By embracing renewable energy, Alliant Energy is positioning itself for long-term growth and profitability. They understand that the energy landscape is changing, and they're making the necessary investments to stay ahead of the curve. Alright, let's take a look at Alliant Energy's recent performance. In a word, steady. They've consistently met or exceeded earnings expectations, demonstrating their ability to navigate the challenges facing the utility sector. While their growth might not be as explosive as some high-flying tech stocks, it's important to remember that we're talking about a utility company here. We're looking for stability, consistency, and predictability, and Alliant Energy delivers on all fronts. Their focus on cost management and operational efficiency has been key to their success. They're running a lean operation, folks, and that's reflected in their solid financials. Remember, slow and steady wins the race. Alliant Energy is a marathon runner, not a sprinter, and that's just fine by us. Now let's talk about everyone's favorite topic, dividends. Alliant Energy has a solid track record of paying dividends, and they've consistently increased their payout over the years. While they might not be a dividend aristocrat like AEP, they're no slouches when it comes to rewarding shareholders. Their current annual dividend yield is a respectable 3.1%, providing investors with a steady stream of passive income. That's right, folks. Alliant Energy pays you to own their stock. And with their commitment to dividend growth, that income stream is only going to get bigger over time. So, if you're looking for a company that puts cash in your pocket, Alliant Energy is definitely worth a closer look. Alright, let's talk about the stock price. As of today, Alliant Energy is trading at around $55 per share. Now I know what you're thinking, that's a pretty attractive price point. And you're right, folks. Alliant Energy offers investors a compelling combination of value and growth potential. They're a well-run company with a solid track record, and their stock price reflects that. Is there room for growth? Absolutely. As they continue to execute on their renewable energy strategy and deliver solid financial results, we could see their stock price climb even higher. Remember, folks, this is a long-term play. We're not looking for a quick buck, we're looking for sustainable growth and steady income. So, what's the bull case for Alliant Energy? Why should you consider adding this Midwestern powerhouse to your portfolio? First and foremost, Alliant Energy operates in a stable and essential industry. People need electricity and natural gas, and that's not going to change anytime soon. Second, they have a strong track record of financial performance and dividend growth. They're consistently profitable, and they're committed to rewarding their shareholders. And finally, Alliant Energy is well positioned for the future of the energy industry. They're investing heavily in renewable energy and grid modernization, ensuring they remain competitive for years to come. Alright folks, we've dug deep into the balance sheets, scrutinized the income statements, and charted the technicals. Now it's time for the moment of truth. Which electric titan will power your portfolio? It's like picking between prime rib and filet mignon. Sometimes you just gotta go with your gut. And my gut, after all this analysis, is telling me, well, before I reveal the winner, let's take one last look at the tail of the tape. We've got AEP, the old reliable, with its history of dividend growth and its wide moat in the regulated utility space. And then we've got LNT, the scrappy contender, making moves in renewables and showing real potential for growth. It's a tough call, folks, a real nail-biter. Now I know what you're thinking. Jim, you love those dividends, you preach the gospel of dividend growth. And you're right, I do. But sometimes, you gotta sacrifice that sweet dividend for explosive capital appreciation. It's like choosing between a bond and a growth stock. The bond pays steady, but the growth stock can multiply your money. AEP's dividend is solid, but LNT has growth potential. It's a classic dilemma: steady income or outsized returns. Let's talk about growth, baby. Because in the world of investing, growth is king. And in the utility sector, growth can sometimes be hard to come by. These are traditionally slow and steady businesses, with predictable earnings and limited opportunities for expansion. But that's not always the case. Sometimes you get a company that's willing to shake things up, to embrace new technologies, to invest in the future, and that's where LNT really starts to shine. They're making big bets on renewable energy. And I think those bets are going to pay off big time in the years to come. Now, AEP isn't completely ignoring the renewable energy revolution. They're making some moves, but they're not moving as aggressively as LNT. And in a world that's rapidly transitioning to clean energy, I think that could put them at a disadvantage. Now let's talk about valuation, because at the end of the day, we're all about buying low and selling high, right? And right now, both AEP and LNT are trading at pretty reasonable valuations. They're not dirt cheap, but they're not outrageously expensive either. It's like finding a brand new Cadillac for the price of a used Chevy. AEP is trading at a slight discount to LNT, but that's to be expected given its slower growth profile. But here's the thing, folks. Sometimes you get what you pay for. And in this case, I think LNT's growth prospects justify its slightly higher valuation. It's like buying a stock that's on sale, but the sale is about to end. You gotta get in before the price goes up. So there you have it, folks. We've looked at the financials, we've analyzed the growth prospects, we've considered the valuations, and now it's time for me to render my verdict. This has been a tough one, a real battle of the titans. But in the end, there can only be one winner, and the winner is Alliant Energy. That's right, folks. LNT is my pick to outperform in the long run. I love their commitment to renewable energy, I love their growth potential, and I think they're just getting started. Now don't get me wrong, AEP is a great company and it could still be a solid investment. But for my money, I'm betting on the future, and I think the future belongs to Alliant Energy. Remember, this is not investment advice. Do your own research, consult with a financial advisor, and always, always, always have a plan. But if you're looking for a stock with a bright future, a stock that's poised to capitalize on the clean energy revolution, then look no further than Alliant Energy. This is a stock that could power your portfolio for years to come. That's a wrap on our comparison of American Electric Power and Alliant Energy. Don't forget to like, subscribe, and hit the bell icon for more stock insights. Leave a comment below on which stock you think is a better investment.